market basically at one point in time was down about 7%. This is not a normal day, and a massive candlestick like that does suggest that we have further downward pressure to go, perhaps down to the 4,000 level. Again, this is a situation where we had dropped almost 9% in silver, and as anybody who has seen my work in the past knows, I always say when metals go and they start falling, silver is much more weak than gold most of the time to the downside. The global markets were rocked during the trading session by the sell-off in gold and silver, but quite frankly, if you've been paying attention to me, and I'm assuming a bunch of other people, they've all told you a day like this was going to happen. Metals get crushed on Tuesday. This is Chris from Hola Prime taking a look at your technical roundup. In the first chart, we have the gold market, which has been absolutely crushed, dropping to the $4,100 level, but starting the day near the $4,375 level. Candlesticks like this almost never happen in a vacuum. And what I mean by that is short-term rallies probably attract more selling pressure. The market basically at one point in time was down about 7%. This is not a normal day, and a massive candlestick like that does suggest that we have further downward pressure to go, perhaps down to the 4,000 level. If we break down below the $3,950 level, then it's opening the possibility of a move down to the $3,800 level, where the 50-day EMA currently resides. This has been everybody's favorite trade, and unfortunately, when you look at the reality, retail traders have been going nuts for gold, and it's the only thing we've talked about for a while, and the financial markets, it seems. We did, at one point, form a bit of an ascending triangle. We broke out. That measured for a move to $3,800. We hit that rather quickly and then just took off to the upside. That could be support as well, especially as that 50-day EMA is there, but a candlestick like this is not a good sign. Silver, of course, looks weak as well and is now well below $50. It's pretty much to the point where we can assume that the uptrend is either over or is about to get smacked across the face here. Again, this is a situation where we had dropped almost 9% in silver, and as anybody who has seen my work in the past knows, I always say when metals go and they start falling, silver is much more weak than gold most of the time to the downside, and you can see that has played out again. Silver has been talked about by analysts ad nauseum over the last couple of weeks, and once you start seeing random people on the street talking about silver, you know something's up. I started to see that about a week and a half ago, and since then we have dropped basically 11%. I think this is a scenario where we may see another attempt to push this market to the upside, but we have two very negative candlesticks, and if you look at it on the futures charts, you can see those are heavy volume days. In other words, we're about to see something break. It's either going to be the banking system, and silver will go to $200 an ounce, or it's going to be silver. I suspect it's the latter of the two. The euro continues to look fairly soft against the US dollar, as we did initially try to rally, but the 50-day EMA has caused enough resistance to turn things around and show signs of weakness. We find ourselves at the 1.16 level, which is a large, round, psychologically significant figure and an area that's been important a couple of times previously. Now we have to figure out whether or not it has any relevance now. So far it does, but if we break down below 1.1550, I think the euro could very well find itself looking to reach the 1.14 level where the 200-day EMA currently resides. Rallies at this point in time, I think, continue to be looked at with suspicion. And it's worth noting that we had broken through an uptrend line, fallen enough to really get things going, and then bounced to test that uptrend line and have fallen again. This is classic market memory, showing that the sellers are more likely than not going to remain somewhat in control. The British pound has fallen as well, and we are below the 1.34 level and dropping. I think this is a market that, although maybe we will get further downward pressure, I think it's probably not going to be as bad as the euro. I think the euro finds itself in much bigger problems at the moment, although it is worth noting that as the US dollar goes against one currency, in general, it'll go against the others in that region in the same direction. I think we're going to test this 200-day EMA. If we break down below there, we could go looking to the 1.32 level, an area that's been important more than once. Ultimately, I think this is a market that is soft, but probably not the quickest short. I would take it, in favor of the US dollar. I think there are easier markets out there, such as the euro. The dollar has rallied quite nicely against the Swiss franc again at the 0.79 level, and this leads me to believe that this is the process of trying to find a bottom. That means it could be very noisy, and it does make a certain amount of sense considering that both of these currencies are considered to be safety currencies. And therefore, you have to understand that it might be a little bit less aggressive than some of the other pairs if the US dollar really does start to take off. The 50-day EMA sits right around the 0.80 level, and if we can break above there, then the 0.8070 level gets targeted. Anything after that opens up the 0.82 level, and at that point in time, I think you'd have a longer-term move to the upside. If we break down from here, pay close attention to that 0.78 handle. We shied away from that when we fell there previously. I still think we're in the middle of a major bottoming here. The US dollar rallied significantly against the Japanese yen during trading here on Tuesday, as we are now threatening the 152 yen level. That's an area that I think has a certain amount of importance attached to it, but nothing major. I think what we're getting here is a potential move to the 153 level again, an area that caused some problems, but this has been a bullish market that pulled back to test the top of the gap and then rallied quite nicely. If we can break above the 153 yen level, then I think we go looking to the 154.50 yen level. The size of the candlestick is rather bullish, and I think you've got a situation where buyers continue to just pressure the market to the upside, and I think short-term dips continue to be bought into as the Bank of Japan probably has to keep monetary policy rather loose. This has been a move against the Japanese yen against several different currencies, and I think that continues to be the main theme here, the Bank of Japan and the Japanese yen. I have no interest in shorting this market anytime soon. The US dollar initially rallied against the Canadian dollar during trading on Tuesday, only to turn around and show signs of weakness. Market participants continue to see the 1.40 level as a major support level. And I think that is an area that a lot of people will pay close attention to. A breakdown below there, I think, opens up the possibility of testing 1.39. But the 50-day EMA has broken above the 200-day EMA to kick off the so-called Golden Cross several days ago. And now, if we can break above the 1.41 level, then market participants are likely to try to go looking to the 1.4250 level, where we have a lot of supply and had broken down significantly. For what it is worth, there is an inverted head and shoulders pattern that measures for a move to that 1.4250 level. So I do think that's where we end up given enough time, not only due to the weaker than anticipated Canadian economy, although CPI numbers were stronger than anticipated during the session, but also the fact that the interest rate differential continues to favor the US dollar. Ultimately, this is a market that I think will try to get up there, but it's probably going to be very choppy as per usual, in the US dollar Canadian dollar pair. The Australian dollar tried to continue to recover from the previous session and then fell apart. And now it looks like we are just simply hanging around the 200-day EMA in a sideways market. I anticipate that continues to be the case, as the 0.65 level is somewhat interesting. Then the 0.6550 level above there features the 50-day EMA and is also an area where we had seen a lot of market memory and a bit of a magnet for price. If we were to break down from here, the 0.64 level could be targeted, which is an area that had been massive support previously. I think this is a market that more or less goes back and forth sideways, trying to figure out where to go next, as the choppiness is understandable in a situation where we just don't know what the overall global economy is going to look like. And of course, the Australian dollar and the Australian economy is highly connected to the flow of hard commodities into China, which then turns around to get made into goods sent across the Pacific and, of course, the European Union. The New Zealand dollar did fall pretty significantly during the trading session, but it has recovered quite nicely. The 0.5750 level is an area of resistance. We are trying to challenge that again. We'll have to wait and see if we can break above there. But all things being equal, this is a market that I think continues to see sideways action. The market is going to continue to see a lot of noisy behavior. And the New Zealand dollar, of course, is a currency that is highly influenced by commodities and global growth or lack of. I think it is a significant downtrend that may be due for a little bit of a bounce. We'll just have to wait and see. But I also recognize that even if we do bounce from here, the 0.58 level should be interesting, right along with the 50-day EMA for potential shorting opportunities. The euro has gone back and forth during the trading session here on Tuesday as we are hanging around the 50-day EMA. The 50-day EMA, of course, is an area where a lot of people are going to see this market as one that's very flat. And I think this is a market that you have to look at this through the prism of balance. I think we're just perfectly balanced here, and it's going to be difficult to get overly excited. We have formed a triple top with divergence, so I would lean to the downside, especially considering how the euro has sold off against the US dollar and how the British pound, although selling off against the US dollar, is not doing so as rapidly. So that could be one measuring stick to look at for a potential short. But honestly, if you are shorting this pair, you are going to have to take your time and just simply wait for the market to move in your direction. The euro fell hard. It opened up with a negative gap to reach the 0.92 level, an area that's been defended quite aggressively and then turned around to rally. I don't know this. There's no way to know this, but the Swiss National Bank is almost certainly watching this general vicinity, and if they are, they have been known to get involved in the market in a stealth-like manner at times, just to make sure that the Swiss franc doesn't appreciate too rapidly. It's been lower than this, but obviously over the last year or so, something's been in this market defending the 0.92 level. And at this point in time, any rally that I see suggests to me that we probably have an opportunity to sell it at higher levels. That being said, it's also worth noting that the Swiss franc loosened up its grip on a lot of different currencies, so it might just be a coincidence. Either way, as a general rule, as risk appetite increases, this pair rises, and as risk appetite falls, it falls as well, as the Swiss franc is considered to be one of the ultimate safety currencies out there. Speaking of the euro, it has had a nice day against the Japanese yen. Maybe not as strong as the US dollar, but the euro has rallied quite nicely. We gapped higher to rally and then pulled back in order to test this gap and then bounce again. The 176 yen level is an area that we have broken above, and if we can clear that, then we could go to the 178 yen level. All things being equal, short term pullbacks uh, offering opportunities to buy the euro, or more, perhaps, maybe even more explicitly and more importantly, an opportunity to short the Japanese yen. The 50-day EMA sits right around the 173.85 level, and that is an area that I think will continue to see a lot of support as in a floor in this market. Again, this is all about the idea that the Japanese will have to be loose with monetary policy, and the latest election does suggest that could be the case. The euro, although I don't like the currency, I like it more than the yen, so it makes sense that we are seeing what we are seeing. The British pound broke below the 1.06 level during the early hours on Tuesday, only to turn around and rally to the 1.0650 level. The 1.0650 level was the beginning of significant support previously, as it was more or less a support region. The question is, can it hold now? I think we are on the precipice of a pretty big battle when it comes to the Swiss franc, not just against the British pound, but against most currencies. The Swiss National Bank will defend any perceived level against its own currency that they want to. And of course, 1.06 might be that level in the British pound based on historical charts. If we can break to the upside and clear the 50-day EMA, which is closer to the 1.0733 level, then I think you have the real chance of a move to the upside. While I'm not necessarily calling for that right now, I do recognize that there is a lot of support underneath that could come into this picture and cause a lot of headaches for those of you out there looking to short this pair. A bounce that shows signs of exhaustion on a daily candlestick, that might get me interested in shorting. But again, I think the downside, although probably preferable, isn't necessarily as free and clear as I think a lot of traders believe it is. The British pound has rallied quite nicely against the Japanese yen. As you can see, we had gapped higher, exploded to the 205 yen level, pulled back to right around the 200.75 yen level, and then bounced again. We are above the 203 yen level as we close the session out. And I think at this point, it's like a market that is likely to continue to see a lot of value hunting on dips, and I think that continues to be the case. I have no interest whatsoever in shorting this pair, and if that were to break down, then I think the 198 yen level could be support, all things being equal. I like this market to the upside. I like the fact that you get paid at the end of every day to hold it, and I think most other traders feel the same way. Again, a lot of this comes down to the Japanese yen, and the Bank of Japan will have to lose a little bit of its tightness, uh, monetary policy, and therefore I think you've got a situation where it's probably only a matter of time before we squeeze higher. The Canadian dollar has rallied nicely against the Swiss franc, and if the Swiss franc were to suddenly give up some of its strength, this might be a place where you would be tempted to get long, but we have a lot of work to do before we even begin to think that the trend has changed. We'd have to get above the 0.5775 level to truly have that conversation, which is about 100 pips above where we are right now. That being said, this is interesting. I'm watching it, but there's a downtrend line and the 50-day EMA that comes into the same area. And with this being the case, I think you have to look at this as a market that sees plenty of massive resistance above that traders will probably be selling into. If we can see signs of exhaustion, I'm almost positive people will do what they can to take advantage of cheap uh, Swiss francs. On the other hand, though, if we do break to the upside, then the market could go much higher, perhaps even as high as the 200-day EMA, but that's going to take a collapse of the Swiss franc overall. The Canadian dollar has had a very strong day against the Japanese yen, breaking above the 108 yen level. the market breaking above there opens up the possibility of a move to the 110 yen level, an area that has been important multiple times in the past, and of course is a large, round, psychologically significant number. The 50-day EMA has been a launching point, just as the 200-day EMA has been. Short-term pullbacks, I think, continue to be an opportunity to be a buyer of the Canadian dollar against the Japanese yen. And while I don't think much of the Canadian dollar at the moment, what I do recognize is that the Japanese yen is very weak, and I think it continues to be. Again, this is all about the Japanese yen and not about the Canadian dollar. Ultimately, this is a market that I think, given enough time, will find buyers looking for a little bit of a dip and a little bit of a bounce to get involved with. The euro against the Norwegian krone is a market that I think continues to be a currency pair that a lot of you are probably not paying attention to, but it is worth paying attention to, as the 11.75 level is an area that has been both support and resistance multiple times. We have broken down a bit, and it looks like the 11.60 level could be the target. But we did bounce a little bit towards the end of the day, so I think it's going to continue to be very noisy and very choppy. And with that being the case, I think you have to be very cautious and perhaps more importantly, patient if you are trying to short. If we tried to buy this pair, perhaps a drop and a bounce might be a good thing. Or if we can break above 11.8, then you could have the market really take off towards the 12 level. But keep in mind, again, very choppy, very noisy. The euro has gotten hammered against the Swedish krona. And now I have to keep an eye on the 10.88 level, which could be a support level. If we break down below the 10.88 level, then we could go down to the 10.77 level. Short-term rallies look like they are selling opportunities, with the 50-day EMA right around the 11.01 level, offering a bit of a barrier as well. As far as buying this pair is concerned, right now I don't like the idea of doing that because, quite frankly, I don't like the I don't like the euro overall. The New Zealand dollar has exploded to the upside against the Japanese yen, breaking above the 50-day EMA and even the 200-day EMA indicators. Market participants are obviously aware of the fact that we broke above the 87 yen level, and now it looks like we are probably going to see the market go looking to the 88.50 yen level. Short-term pullbacks, I think, continue to be buying opportunities as the market continues to be very noisy, and I think it is more or less a buy on the dip scenario, much like all other Japanese yen related pairs. The market looks at the 85 yen level as a massive floor in the market, and as long as we can stay above there, we are at the very least trying to go sideways. But I think, given enough time, we will have to really start to press to the upside as the Japanese yen is so weak, with the New Zealand dollar not necessarily being a currency that I want to own, but I do know that the Japanese yen is clearly a currency that's in decline overall. The New Zealand dollar has rallied quite nicely against the Swiss franc after initially falling, breaking above the 0.4550 level, and then an opportunity to go looking to the 0.46 level, where I think you would see a certain amount of market memory come into the picture and put downward pressure on this market. Even if we break above there, the 0.4650 level is an area that I think continues to be difficult to get above. And I think it's also worth noting that the 50-day EMA is sitting right about that area. And that, I think, offers your ceiling. If we can break above there, then it's possible that we could see a bigger move. But really, at this point, I think any rally will more likely than not end up being a shorting opportunity in what has been a very strong downtrend. Keep in mind that the Swiss franc, of course, is a safety currency, and the New Zealand dollar is more or less a risk on type currency. The New Zealand dollar did have a good day around the world. Whether or not that continues remains to be seen because the New Zealand dollar has been so weak for so long. The US dollar initially rallied against the Mexican peso, but we continue to see the 18.5 level offer a bit of a short term ceiling. We've just gone sideways for basically 6 weeks. The 50-day EMA hangs around the 18.5 level as well. And of course, we have this downtrend line. The 18.50 Mexican peso level was previously resistance. It should now be resistance again, just as it had been support before that. In other words, there's a lot of market memory there. The 18.20 level is probably the target at the moment. And keep in mind that you get paid to hang on to a short position in this pair. The US dollar tends to shrink against the peso when the US economy is doing okay. That's because Americans will buy a ton of Mexican produced goods. In fact, Mexico is the world's largest exporter to the United States. It's not China. And therefore, think of it as if the biggest customer is buying all of your goods, your store is doing well. In this case, the store, of course, is Mexico. The light sweet crude or U.S. oil market has been very noisy during this session. We initially fell and then shot higher, and now we've given back quite a bit of those gains. I think this is a sign that anytime this market rallies, you have to be thinking about shorting it because, quite frankly, there's no reason for it to go higher. There's a serious lack of demand out there, and of course, more importantly, massive oversupply. OPEC, Russia, and the United States are all pumping out tons of oil, and I think that continues to be a major problem. That being said, we also have to worry about whether or not the global economy is slowing down, although I don't know that it is. But traders will be fearful, and in that environment, it makes sense that they start to suppress the price of crude oil because crude oil is the life's blood of the global economy, and it's how things get from point A to point B. If we have less economic demand and movement, that obviously means we need less crude oil. The $60 level above, I think, is your ceiling at the moment. That, of course, is assuming that we even get there. The NASDAQ 100 has been somewhat back and forth during the trading session here on Tuesday, initially dropping, but now it looks like we are trying to go to the upside, perhaps showing signs of life. And I think we continue to see buyers jump in and try to take advantage of value as it appears on these pullbacks. The 25,000 level looks as if it has scared the sellers away a bit. So ultimately, I think you've got a situation where anytime you see little bits of value offered based on dips that traders will come in and take advantage of. The S&P 500 looks very much the same at the moment as we are threatening a major breakout. The 6,700 level should be the floor in the market currently. And anything below there, then you have to think about the 50-day EMA and the uptrend line. Right now, though, I think it's more likely that we break out than break down. But even if we do break down, I'm still looking for value to take advantage of in the form of a drop and then a bounce. The Dow Jones 30 has made an all-time high at one point during the session, but you can see we couldn't hang on to the top of the range for the day, but either way, it's still a pretty impressive move, and I do think it will more likely than not drag the other indices up with it given enough time. The 50-day EMA is down at the 45,830 level. I think it'd be tough to fall below there. And therefore, I look at each pullback as a buying opportunity. Bitcoin has been all over the place and quite frankly just doesn't seem to know what it wants to do. That makes a certain amount of sense because ultimately this is a market that I think continues to pay close attention to the $108,000 level as support. and the 50-day EMA and the 11,400 level by extension as massive resistance. If we can break above there, it opens up the possibility of a move to the 11,000, or excuse me, $117,500 level. Bitcoin's somewhat neutral at the moment, but the action during the day at least showed it had fight in it, which is a good sign. Ethereum, very much the same situation as we just dance around the 4,000 level. There's obviously a certain amount of psychology attached to 4,000, and therefore I think you have to assume that there might be a little bit more back and forth in this general vicinity. The $3,400 level is your floor, and if we can rally, somewhere around $4,700 is probably your ceiling. I still like the idea of buying dips. The global markets were rocked during the trading session by the sell-off in gold and silver, but quite frankly, if you've been paying attention to me, and I'm assuming a bunch of other people, they've all told you a day like this was going to happen. The problem is you never know when it is, so unfortunately, a lot of traders probably have been caught on the wrong side of the precious metals trade. My anticipation is if we get a bounce, those markets will probably roll over as well. I look for the US dollar to continue to strengthen, and I think the US stock markets on the whole will probably do fairly well.
Hola Prime, trade with transparency.